Welcome back to the Brent Bruce Daily, where each day we take a look at home loan interest rates and what is going on in the market that is making them move up or down, which direction that we are headed. Today is Monday, March 6th, 2023. It is now 3:58 p.m. Central Time, and the mortgage-backed security and bond markets are closing in 2 minutes. So we know that we are just about there for the day. Let's take a look and see what is going on. We are currently down 11 basis points. Oh, now down 5 basis points. Really been fighting throughout the day, just around the zero. We were up 5 at one point. We were down 11 last time I looked, and now we're down 5. The 10-year Treasury is only up 1. But man, we are still barely hanging on under that 4.0 that we do not want to get above for very long. That's for sure. So you see that we did have a couple of good days here. Hopefully this actually was the trough, and that we begin to see a consistent move higher. Now remember that this week is going to be the really important report coming out, the jobs report covering the month of February. So March 10th is the jobs report covering the month of February. And if you remember, the jobs report for the month of January is what really put us in a bad spot. This is where we were when that report came out, and we went way down from there. Now, again, this was an inverse chart. So when you see these chart numbers going down, then interest rates are going up. And we fell below many floors of support over the past month. And now we are starting to fight to get above each one. We got above this here. We got above the next Fibonacci level. We briefly got above the 99,845, got pushed down. So it looks like we're going to end below this for the day. This is going to be our new ceiling. They were going to try to push above. Now, we are highly anticipating the Friday, March 10th jobs report. Whatever happens there is really going to tell us if we are going to shoot higher in the month of March or if we get pushed back down to some new lows. So this is going to be pivotal. Let's take a look and see where we are on our actual home loan interest rates. Let's run our scenarios for the Brent Bruce Daily, which is our very well qualified 30-year fixed conventional home loan. 800 FICO score, 25% down, perfect customer. We want to take a look and see what the ideal client is looking like today. And realistically, Fannie and Freddie are even wanting more of a down payment. You get a little bit better interest rate now. If you have, 40% down, an even larger amount down. And I want to open this up here, kind of make you see or help you see what the parameters are for the transaction that we are looking at. And currently we are at 6.75%. Now that is a little bit better than we were ending the week on Friday. We were at 6.875, but man, there's not a whole lot of credit there, only $7. So if we open this up and take a look and see, what if we want to pay 1 point, just under a point here at 0.942 is 6.375. So we've come back a little bit. We've had a little bit of an improvement, really about 1/8%, just from last week to this week. You can see where the banks were holding on to a little bit of profit, and they're giving us a little bit of that here today. I mean, we didn't have a better day today, but we do have better interest rates. So that helps you see the disconnect between the markets and the actual banks that set the interest rates. So it goes to show that there's a little bit of movement there and how they want to try to be competitive. So make sure that you definitely tune in this week, because this is a pivotal week ahead of the jobs report on March 10th. I will make sure to keep you posted throughout the week leading up to that report. I will talk to you again tomorrow.